Hello friends, welcome again to my channel. Today we will discuss about insurance where it is part 7, sorry. Numerous studies compare insurers costs for different distribution methods, especially for direct writing versus independent agents and brokers in US property casualty insurance. Joxo 1973 provided early evidence that expense ratios were lower for direct writers than for independent agency insurers. Cummins and Vandihari 1979 estimate more elaborate models of insurers' expenses using pooled cross-section and time series data. The result again indicate significantly lower expense ratios for direct writers. Later analysis by Barsis and Nelson 1992 and Rigon 1999 obtained similar results with richer measures of distribution type and data for more lines of business. Joxo 1973 urged that differences in operating costs between direct writers and independent agency insurers could not be explained by differences in services. He suggested that prior approval rate regulation had discouraged price cuts by direct writers, that difficulty in raising capital and obtaining customer recognition slowed their expansion, and that it would be costly for independent agency insurers to become direct writers. He urged that direct writers behaved as oligopolists subject to short-run capacity constraints, and that concentrated profit maximization involved selection of risk with lower than average expected claim costs. Smallwood 1975 also suggested barriers to insurers switching to direct writer distribution. He urged that independent agency insurers were more vulnerable to adverse selection, and he developed a formal model of insurer risk selection which did not consider asymmetrical information. Cummins and Vandihari 1979 assumed that lower operating expenses for direct writers provide prima facie evidence of superior efficiency. On the other hand, based on stochastic frontier analysis of cost and profit efficiency for alternative distribution system, Berger, Cummins, and Weiss 1997 provide evidence that while insurance with independent agents and brokers were less cost efficient than direct writers, there was no difference in profit efficiency. They interpret their overall results as consistent with the higher cost being attributable to higher quality of for independent agency or brokerage insurers. Other work considers whether higher costs of independent agency and brokerage systems are associated with specific dimensions of service quality. At Jar 1976 provides evidence that independent agents are significantly more likely to assist policyholders in claim settlement than exclusive agents. Baresi, Dorefin-Goss, and Nelson 1995 present evidence using data on consumer complaints to regulators in 5 states that insurers using independent agents receive fewer complaints. More recently, Accordet and Rakti Dopner 2010